Today's episode of Market Talk is brought to you by GrowMark FS. Keeping up on the latest in ag is a challenge to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And a good afternoon. Welcome into Market Talk for this Wednesday, June 23rd. I'm your host, Jesse Allen. Great to have you here with us. MarketTalkAg.com. That is our home on the web. MarketTalkAg.com. Find all the latest market information, ag news there. All of our streaming sources. You can download, subscribe to the podcast. Leave us a review, whatever streaming source you use. We would appreciate it. All of our radio affiliates, everything online, MarketTalkAg.com. Well, another fairly quiet day today in the grain trade, at least on the quartered soybean side, as we're watching this weather kind of shape up here as we get to the end of the week with rainfall in the forecast for a good portion of the eastern and central corn belt. Let's talk about everything that's going on with the markets and how that is playing in. We'll lead off with that today with our good friend Mike Zuzolo with Global Commodity Analytics. And Mike, good afternoon. And you know, we're watching these weather models. I think enough people have maybe done enough rain dances that we could get some beneficial rains to parts of that central corn belt. But looking at everything, we're still a little uncertain with what's going to happen. And that uncertainty seemed like it kind of spilled over, especially into our quartered soybean markets on Wednesday.
Yeah, I think the trade, you're exactly right, is getting more certain and feeling more comfortable that the damage is too far gone at this point for spring wheat, that there's just not any likelihood at all that much rain's going to fall. And if it doesn't, then you can pretty much kiss that crop goodbye in the plain states. I think that's what the trade's starting to price in earnest, Jesse, because we're back above $8 in the spring wheat complex. I think that spring wheat market could go a lot higher. I don't know what a lot is right now, but I would say to you that another dollar higher would not surprise me at all when you see that you lost 10 points in 1 week in good to excellent conditions. And, you know, there's only 4 or 5 states that produce spring wheat, and then that's just the United States. You have to think about the Canadian prairies as well, and they're in a world of hurt. And I think this is where the Northern Plains has really benefited the spring wheat, and it's really benefited the soybean oil via the vegetable oil market. And we've seen a lot more active tendering by major Middle Eastern countries for vegetable oil because they see the writing on the wall as well, I think, with vegetable oil. So this is the push against the bearish look of the weather pattern as we get closer and closer to this weekend. And one thing that I would say is the spreads right now in corn. I mean, let's focus on corn for a second because that's really where the focus should be, as far as we've got wheat starting to support the corn, but the weather's coming in that could bring our national yield up right in the nick of time. And I think the biggest thing that I see in corn is there's a lot of bulls out there that think that corn can get to $8 in December futures. I'm not in that camp. I haven't really been in that camp. I think the December corn has the upside of where the May and the July went to in terms of upside potential. So the sevens gets it done for me, but I can respect an $8 corn bowl if we miss these rains. And I think what maybe the listener or the viewer wants to think about here and ponder here on today's episode is the idea that if we get 3 or 4 rains in a row in the next 3 or 4 days, starting Thursday night all the way into Sunday night, Monday, in the driest areas of the central corn belt and the western corn belt, I think it's going to be really, really difficult to get those new crop prices up to your target price of $8. And I would say to you, and I've been talking to clients and subscribers a lot about this week, that the trade is not convinced that this weather's coming. It may have made a new weekly low in corn in December and taken out last week's low in December, but notice the July D's corn spread made a new contract high on Wednesday, went up to $1.33, closed at about $1.30, if memory serves me right. That's a brand new contract high and takes out the May high. When you get something like that generating in the month of June, and you still have July weather to look forward to, and July weather forecasts that are turning off hotter and drier by some of the new private forecasts, this rain's got to come, or those $8 corn bowls could be right. So I think it's that important. You're at just that big of a crossroads in the corn market when it comes to this weekend's rainfall. And 3 to 4 systems, not one or 1.5 systems. One system's not going to get it done. It's just too bad of a drought right now.
Well, Mike, I want to pull up your chart on crop conditions here on the video, and we'll talk about it here on the video audio as well. But, factoring in crop conditions along with what we're looking at here with the rainfall potential this weekend. And I know a lot of forecasters, the models are starting to align a bit more, but they're also still a little bit in disagreement. It's going to really depend, it sounds like, where this low sets up. If it sets up a little bit to the north and west, then it sounds like pretty much all of Iowa could get rainfall, good rainfall, parts of southern Minnesota, Nebraska. But if it sets up a little bit farther to the south and east, that's going to leave what it sounds like Iowa mostly dry. And that could be kind of the tipping point. And you look at these crop conditions as well, Mike, and that, that's kind of where we've been pinpointing for a while, and this kind of seems to reflect that just a little bit.
Yeah, it really does. And my apologies to you and to the viewers, because I meant to put Minnesota in there, and I got a late start today. And so I sent another chart to you, but that had Minnesota in it. And so if you factor in Minnesota with these 8 states, so you have a total of 9 states, you've got 4 of the 9 that are below last year's conditions in both corn and soybeans. And this is important because last year, recall, we couldn't do any better than a 172 corn yield and a 50.2 bean yield. And so it is a stretch at this stage to get a 179.5 and a 50.9 yield for this year's yields for the nation, given what we're looking at right now. And as you say, if we set up south and east on this situation for this weekend rainfall, Jesse, clients in Nebraska, and clients in Kansas in particular, are already starting to tell me that they're really stressing right now on the corn, and the plants are not as big as they need to be able to go through a return to 90+ degree temperatures. And so I could look forward to both Kansas and Nebraska actually joining up with Minnesota. Oh, forgive me, Minnesota is on there.
I got the new one. I was able to flip them out on you here.
You are something else. And so you could see the Nebraska and Kansas crops decline compared to last year. And that's where I'll say to clients, look, I'm ruling out even a 175 national yield and even a 50 bushel yield, because it's going to be next to impossible, in my opinion, based upon some of the other things I look at on yield monitors, my yield monitor analysis, that last year's yields even in question, especially in the soybeans and maybe even in the corn.
Well, Mike, as well, we look at these crop conditions, and like you said, I mean, a lot of states lower than last year. And really, I mean, it's going to take a couple rain events here, and it sounded like the potential is there this weekend, but it's still not shaping up. But of course, this is all butting up against now a June 30th acreage report. USDA numbers coming out next week. So it's almost like, we're rolling in from this, this weather event into the USDA reports on the 30th. And that's going to be, this is a very interesting, I would say, a couple of days that are really going to set up, I think, where this market trade is going to go for the rest of the summer, Mike.
Yeah, I agree, and I think this is where, because the weather is coming in, we have the acreage and stocks report as a front burner issue, and the USDA reports are a front burner issue. But it's only because of the weather, in my opinion, Jesse, especially since the dollar and the macro conditions have actually eased up on providing pressure in the grains, and have become more of a headwind instead of more of a tailwind instead of a headwind. We got crude oil up to levels not seen since October of 2018 on Wednesday's price action, and the dollar failed to take out its 52-week moving average to the upside at the end of last week, beginning of this week. So I think this is where, had it not been for the weather turning so conducive to saving this crop, we probably wouldn't be really focusing on the acreage and stocks report that much, but we do have that situation now underneath us. And what this graph is this is a combination of what I sent out to clients in March of the Reuters estimates versus what my estimate was in red. So that's my March figure. And I put that on there because if you look at my March figure in red versus my orange figure for the end of June, there's not a lot of changes. I dropped some in the beans. That's probably the biggest change. but part of that's because I've taken away from the acreage on the wheat, especially the spring wheat. I lost 1 million acres because of the drought, and I took 200,000 away from durum, and I put pretty much all of that into the soybeans to bring up the USDA numbers. But notice that my soybean acreage number from March of 91.4, I'm still below that at just under 90 million acres. And for corn, I really couldn't justify going much more than 1.3% higher. So in total, from USDA's March number, we're looking at about 3.5 more million acres of corn and beans in my estimation. If I'm right about that, and we come in at 92.3 on corn and just under 90 on beans, corn especially, that's not going to get the job done to build our stocks back up very plentiful or with much cushion at all, both domestically and globally. So, you factor this in, Jesse, with the stocks aspect of the report and the next WASDE report, which could show a 10 million metric ton decline in Brazil's corn production. That's 393 million bushels. And so you really do have a situation where I think the corn continues to be more supported than the soybeans. But I've noticed that the trade commentary in the last week or so is back to suggesting that the corn acres are going to be very big and the bean acres are going to barely budge. So I'm a contrarian when it comes to that.
Well, and I'll be interested too. We talk about that. Where are we picking up those acres? Fringe acres? Are we picking up stuff in some of these states that, don't normally have huge corn acreage? I'm very curious to see where those numbers do fall in line. And I'm mostly in agreement with you on that here next week. I mean, you factor that in, you factor in this weather that's a little unknown right now. We'll know more as we get through the weekend. What do I do as a producer right now looking at my marketing plans? I think overall you could almost, I know there's variances, but overall it just seems like it's a good time to maybe reassess a little bit if you need to, and just make sure you have some protection and a floor underneath you, just depending on, this market could go one way or another.
Yeah, and just to finish up that last point you just made, was the client that I work with in Morgan County, Illinois. It's usually number one, number two, or number three in corn yield in the state of Illinois each and every year. He is in that county, and he also sells seed in that county and surrounding counties. And they just did not get the corn planted that they needed to on time because of the wet spring that came in. So that's one of the other things that I think is something that maybe the USDA will show up. But to answer your question, it's very simple at this point. I think we continue to use puts. We continue to use paper positions. We don't do cash selling. We leave our basis open. We leave our cash bushel sales open until we get these rains, and then we can start thinking about doing some cash bushel selling. But until then, we do the puts. And we do the puts, in my opinion, generally speaking. I'll recommend more hedges and getting more downside price risk in place if we take out last week's lows. And see, that's the interesting thing, is while we've taken out last week's lows in December corn, we're still 40 cents essentially from it in terms of July corn. So I don't want to say I'm in the catbird seat, but I'm not fearful of not being hedged in new crop corn right now, because the July, as it gets ready to go into delivery at the exact same time we get these two big reports, it continues to suggest we just don't have a lot of excess stocks out there, and therefore you don't have to press yourself so aggressively on selling bushels. And so as long as we leave last week's lows alone in lead month futures, we don't stimulate fresh sell signals on the monthly chart. And I think we leave those investor bears asleep, and they don't awaken and pick up the selling and push that momentum button and sell like crazy like they did about a week ago.
Mike, let's flip our conversation over to livestock. Cattle starting off the week, I was looking good. We're getting some better cash trade. We were doing good futures. And then today, a little pressure. Wondered if maybe some of that didn't stem from the hog market pulling cattle a little bit lower. But I'd love your thoughts on this cattle market and where we're at right now, as we are, again, starting to get a little better cash trade. Futures are starting to perk up, but those product prices are starting to take a hit as well.
Yeah, I think this is where the jabs are being traded back and forth in the product market. We had the pork cutouts, the bellies, sink terribly last week, and then they came roaring back this week. That really helped bring in a spot of support for the futures market for a day or two. But I think you're right. I think we still are trading the pork and bean trade. I think the funds are still very much alive and kicking, buying both beans and hogs at the same time, selling both beans and hogs at the same time. And I think that's what happened in the middle of this past week is the resumption of the fund-led selling started again. Jesse, one thing that I think is new that we have to be very cognizant of, and it goes back to the African swine fever in China, is that now we're seeing China pick up more of the United States soybeans again, just spotting some cargoes in, but pretty decent quantities over the last 4 or 5 trading days. And we saw more sales to them on Wednesday morning. Between that and the fact that some of the major provinces I keep track of for cash hog prices, we've gone in pork prices in particular at the wholesale level in the northeastern provinces of China from about $2.50 a pound at the beginning of this year down to about 80 cents a pound now at this stage of the game. And so the idea that China is rebuilding their herd and it's getting more of their market-ready supplies into the supply chain seems to be an accurate assessment because of both the supply and demand of soybeans and then booking more and then our prices, their prices going down. So I'll be very interested to see what the weekly pork export sales look like on Thursday morning because I do think the hogs have been a supportive feature for the cattle market. And if they start to go down, then we're going to have to start opening up the idea that the pork is going to start to really kind of frustrate the domestic market. And you're going to see supply backwash into the meat counters and into the restaurants here in the United States as we finish out summer. So my assessment of cattle is pretty simple. We got up to that 137 level in the December contract. That was my overvalue level, and the 124 level in the front end is in the August is my overvalue level. I think it's just time to get some hedges in place and continue to play defensive until we get to the fourth quarter.
Well, and as well on the cattle side too, one other point, it seems feeders may be gaining a little leverage on packers here with some of these prices in feedlot country. But again, I think that's all going to factor back into what you just mentioned between this hog trade and this cattle trade moving forward. But it's nice to see a little bit of maybe leverage there in feedlot country and getting some better prices.
Yeah, I think you bring up a good point. We're in a sweet spot right now because I think packers, I talked to a really good client in Wichita that sells to a large processor pretty much every week. And he said, for the first time in a while, my processor's buying heavy cattle. It seems like he's short bought and he's at least very, very current and he's bidding up. And so it's very welcome. I think Father's Day and that featuring and the retail sales on that side of the equation was much better than anybody thought it would be. And I think that gave us a boost as well. And it really activated the cash cattle, and those box beef prices made more sense to everybody. So cattle caught up to box beef as opposed to the other way around. Now we have the cattle on feed report coming out at the end of this week. The marketings number for May is expected to be about 25% greater than last May. That wouldn't shock me. In fact, I think we need something like that because of that was in the heart of COVID time period, and we're having real supply chain issues. So be cognizant of that. But I'd like to see a really strong marketings number to kind of justify this cash tightness in the cattle belt right now. And I think that could last through the end of June into like the July 10th, July 15th time period. After that, we got to start thinking about the kind of wrapping up of summer.
Mike, on the macro side, the outside markets, anything you're seeing there that we should touch on today?
Well, the Federal Reserve did what we thought they would do as far as talking about the inflation not being as transitory, but now they're walking that back. And so I think that's why we've gotten some more tailwind features to the outside market. So it's very welcome to the commodity markets. And I think that's a really good sign, especially as we get into this weather market and get past this weather market. As long as that dollar stays below that 52-week moving average, it would suggest there's more inflation coming and commodity investors want to stay in the commodities. So I think that's really, I don't want to oversimplify things, but there's so many things to look at right now for producers and ranchers. I'm trying to really boil it down to one or two big things.
Well, Mike, I know you have a lot of great information available through your website and working with producers, and it's just as simple as giving you a phone call and or signing up for a free trial on that website, isn't it?
Yeah, globalcomresearch.com, globalcom with 2 M's, research.com, or call me toll free 866-471-2588. Heading to a cattle conference in southern Kansas this evening. If you sign up for a free trial, I'll send you the packet of the presentation on that.
Well, Mike, a lot of great info, of course, and we appreciate your time as always. Thanks so much for joining us on Wednesday. Safe travels, and we'll talk to you next week.
Thanks, Jesse. You do the same, and appreciate you having me.
Mike Zuzolo with Global Commodity Analytic. Again, find him online, globalcomresearch.com. This has been the Wednesday, June 23rd edition of Market Talk, brought to you by GrowMark FS. I'm your host, Jesse Allen. Have a great afternoon.